All right, so they want you to think the market is this super complex, rational system. It's not. It's a video game, a simulation, right? It's built by the suits for the suits. And just like any piece of code, it is loaded with glitches. Glitches they use to stay on top while you follow the rules. Well, today, we're going to learn the cheat codes.
You know that feeling, right? You sit down with some guy in a tie, he pulls out this shiny brochure and starts droning on about long-term horizons and diversification. But you can't shake this little voice in your head that's saying, this guy is just a salesman reading a script that's designed to keep you nice and calm while he's collecting his fees. We're about to look at the cards they keep up their sleeve.
Okay, first, let's jack into their world. The world of comfortable, predictable, and, let's be honest, soul-crushingly slow advice. This is the official story. It's the one they blast on cable news and repeat in every bank branch in the country. This, my friends, is the blue pill. So you've got two things here. On one side, you have the safe, sanitized version of reality they're spoon-feeding you. And on the other, you have the raw, unfiltered data stream. The signal in all that noise. This is the official narrative versus the ape reality. Let's kick things off with their playbook. So, what's their core logic? Well, they start you off with something so simple it's almost insulting. It's called the rule of 100. You're 40? Okay, 60% stocks. You're 50? 50% stocks. See? It's a one-size-fits-all formula. It's designed to make you feel like you have a plan, when all you really have is a default setting. So, if we follow their rule of 100, a 40-year-old should have a 60-40 portfolio. But get this slide from US Bank says 70-30. So they can't even keep their own simple rules straight. Look, the point is, it's boring. It's the minivan of investment strategies. Sure, it'll get you there eventually, probably after you're too old to actually enjoy it. This isn't a strategy for winning. It's a strategy for not losing too badly. But what if you want to see the code for yourself? What if you want to see the market not as a bunch of squiggly lines on a chart, but as this living, breathing system of cause and effect? Well, that requires a completely different kind of information. It's time to take the red pill. So here's the secret. The pros, they're not just reading boring old annual reports. No way. They are plugged into a fire hose of information called alternative data. And this stuff is everything that isn't on a balance sheet. It's kind of like the digital exhaust of the entire global economy, and it is exactly how they see the future before it ever happens. Now, what's truly mind-blowing about this is just the sheer scale of it. We're talking about everything from social media sentiment to web-crawled pricing data, geolocation pings from our phones, even satellite imagery. You gotta understand, they're not just analyzing the market, they have a god's eye view of the entire planet. And you can bet they're using it to front-run your every single move. And this shows you just how granular it gets. We're talking about hedge funds literally pointing satellites at store parking lots to count the cars before an earnings report comes out. They are tracking the credit card swipes of millions of people. They're monitoring the number of shipping containers leaving ports in China to get a read on global trade before the official numbers are ever released. It's insane. Look, they have a real-time map of the economy. It's a powerful tool for prediction, no doubt. But with that kind of power, well, there's a temptation, isn't there? So what if they aren't just trying to predict the future? What if they're using this massive information advantage to actively shape it, to manufacture outcomes that only benefit them? And that brings us to the dark arts of market manipulation. This is the theory of how hedge funds can actually weaponize information to create fear, uncertainty, and doubt, turning public sentiment into their own personal ATM machine. This right here, this is straight from the trenches. A user on Superstonk just lays out the core fear of the entire retail community. It's the belief that smart money isn't even playing the same game as us. They see a system where media narratives are totally for sale, and the real goal is to shake the diamond hands of the little guy. Okay, so according to the theory, the playbook looks something like this. Step 1, take a massive short position, betting that a stock is going to tank. Step 2, pay off some friendly journalists to publish a whole bunch of negative articles, spreading fear, uncertainty, and doubt. You know, FUD. Step 3, find a law firm to file some bogus class action lawsuit based on that FUD. The headlines alone create even more panic. And finally, step 4, as retail investors are panic selling, the stock craters and the hedge fund closes their short position for massive profits. Rinse and repeat.
So, how do you fight an enemy that can literally manipulate reality itself? You learn their tricks. You start using their own tools against them. Like Neo in the Matrix, you learn Kung Fu. Let's look at how apes are using these exact same tools to find the glitches and beat the suits at their own game.
This is a perfect example. Chipotle. The official narrative says you just gotta wait for the quarterly report to come out. But back in Q4 2014, satellite data, the stuff we're talking about, showed that car counts at their stores were already falling off a cliff. Wall Street didn't downgrade the stock for another 3 quarters. Apes with access to orbital cannons could have seen the truth months ahead of time. And you think you need a satellite to play this game? You're wrong. How about Google? Yeah, a firm called Eagle Alpha, back-tested using simple public Google Trends data to predict consumer stock performance. And the hit rate? 69%. Nice. That is a better track record than most of the so-called analysts on Wall Street. And here is the proof. JP Morgan themselves ran an analysis using consumer transaction data, the same kind of stuff the apes are trying to find. And the result? They generated annualized returns of 16.2%. So you see, this isn't just a theory. This is institutional grade alpha, and it's just hiding in plain sight. So, you've seen the two paths. You've got the blue pill of the official narrative, and you've got the red pill of the raw data stream. This choice, it isn't just about stocks and bonds. It's about how you see the entire system. It's about freeing your mind from the financial matrix they have built for all of us. On the left, you've got the slow and steady path, the one your advisor sells you. On the right, you've got the quant-ape approach, using data to spot the glitches. Is it more volatile? Yeah. Does it require more work? Absolutely. But the potential upside? Well, it's on a totally different level. But of course, this is all just a theory, a thought experiment. Don't go betting the farm without doing the work yourself. And I have to say this very, very clearly, none of this is financial advice, okay? Think of this as educational banter. The market, at the end of the day, is a high-stakes casino. All we're doing here is looking at the game theory and trying to figure out how to count the cards. Always, always do your own research. Speaking of which, we are watching this chart like a hawk. So, while you're waiting for that next candle, go grab your free gear. Sign up for Public, you get $20 in free assets. Check Webull for that BTC promo, or go grab your NVIDIA stock on Moomoo. All the links are down in the description. Do me a favor, smash the like button, subscribe to the tribe, Apes Together Strong. Okay, one final thought. The suits want you to believe their code is perfect. It's not. It is full of anomalies, divergences, and glitches that give the entire game away. So my question to you is this. What's the biggest glitch you're seeing in the market right now? Drop it in the comments. Let's find them together.